Good evening, everyone. Oil was the big news on Wall Street today with another sharp drop in prices. They touched $75 a barrel. That's the lowest point in 3 years. Brent crude, the international benchmark, fell to a 4-year low. Now, the sell-off was sparked by Saudi Arabia's unexpected decision to cut what it charges the U.S. for crude. There are now worries that could open the way for more price declines at a time when global demand for energy is slowing and as oil production is at an all-time high. West Texas crude was down $1.59 a barrel, closing just above $77. Brent crude fell to $82.82 a barrel. Jackie DeAngelis has more on the slide in oil prices as traders wonder, how low can it go?
A bloodbath in the crude pits. Traders saying Saudi Arabia's price cuts yesterday were the trigger, then the technical sellers piled on.
OPEC was once again lowering prices, not cutting production, and the dollar started to strengthen again. So we traded through that $79 area. It looks like good resistance now, and the next bit of support would be the $74.95 number.
All eyes are on OPEC's next meeting on November 27th. Traders were thinking that we could see supply cuts from the cartel, but Saudi's latest move, as one of OPEC's most influential members, indicates that this could be a price war.
They want to put some of the smaller producers, the ones that have higher costs, higher capital costs to produce crude oil, they want to put them out of business. And they have shown that by reducing prices to the U.S.
The United Arab Emirates oil minister recently said there's no need to panic on pricing. But OPEC members Venezuela and Ecuador have been vocal in expressing concern. Could their influence be enough to sway the cartel?
The Middle Eastern powers have a lot of power still, and the reason why they do is because the crude oil they produce is cheap. Therefore, they have a lot of leeway on what they want to do with the pricing. If they're producing at $30 a barrel, they could sell it all the way down to $30 a barrel and still scratch or make a little bit of money if it's over that. If you're a Latin American producer and you have a higher production cost, you can't go down as far, so you're worried.
Meantime, everywhere you look, oil bulls are turning into bears. Traders that were looking for oil to drop to 75 now saying 70, and some see even more downside from there. The good news, oil slide has had a major impact on retail gas prices, hitting a 49-month low, with the national average under $3, now $2.97 according to AAA. We haven't seen this since Christmas of 2010. Christmas may have come early for consumers, but U.S. oil producers could be getting coal. For Nightly Business Report, I'm Jackie DeAngelis.